Finance Minister Lim Guan Eng says it is tough for the government to influence land prices, which is why it is opting to reduce the cost of construction instead. In his own words, Lim says that land prices were too big for the government to influence. Lim was hitting back at Pekan MP Datuk Seri Najib Razak's comment on housing prices, pointing out that high land prices were prevalent under the previous administration. Lim hopes that housing developers will respond positively following Putrajaya's move to exempt construction services from being subject to the SST. Housing developers have until the end of the month to respond. He said it is only fair for developers to cut their prices given the lower construction costs due to the exemption. Meanwhile, on the 10,000 ringgit levy for skilled foreign workers, Lim said the levy is a relaxation of the existing rules. He explains that this move helps to retain skilled workers and avoid too many of them from staying too long in Malaysia. AirAsia Group CEO Tan Sri Tony Fernandes said there is massive potential in the coming years for the airline industry in China. In a LinkedIn post, Fernandes said that with only some 8.7% or 120 million Chinese nationals holding passports, the airline industry stands to profit. Currently, AirAsia flies its passengers to 17 cities in China. He added that the positive outlook is backed by efforts to simplify passport application procedures, as well as further internationalization in various industries. This comes after AirAsia announced on August 30th that it was dropping a proposed JV with State-Link China Everbright Group and the Henan government. Fernandes said that parts of China remain largely underserved. He added that the budget airline now has a commanding mix for Chinese tourism growth, thanks to its growing network and the fly-through connectivity. Fernandes explained that there has always been a lack of connection between smaller cities in China and India. But with the airline's extensive fly-through network, both markets are now more connected than before. Maybank has named Datin Ami Morris as the new CEO of its investment banking arm, Maybank Kim Eng Group. The appointment takes effect today. Ami, who has been MKE's COO since 2015, replaces Dato' John Chong Eng Guan. Concurrently, Chong also let go of his position as CEO of MKE's Malaysian unit, Maybank IB, with his deputy Fad'l Mohamad taking over. Ami had joined Maybank IB in 2009 as the head of equity markets, where she was responsible for both institutional and retail businesses. According to Maybank, Ami was central in the successful acquisition, integration and subsequent management of Singapore-based Kim Eng Holdings. Fad'l had joined Maybank IB as Deputy CEO in March 2015. Maybank said Fad'l was part of the team under Chong's leadership that was successfully recognized as Malaysia's best IB for the last 4 consecutive years. Maybank President and Group CEO Dato' Abdul Farid Alias said he was confident that both Ami and Fad'l are well equipped to take MKE to new heights. Loss-making oil and gas player Sapura Energy was the most actively traded stock on Bursa Malaysia today, with over 1.8 billion shares traded. It ended the day 3.66% up at 42.5 cents. CIMB Research, however, said Sapura had significantly underperformed following its core loss of 283 million ringgit for the first half of FY19. The poorer numbers were due to weaker engineering and construction revenue. The loss made up 89% of CIMB's previous FY19 loss forecast. However, CIMB retained its ad call for Sapura, but reduced its target price from 80 cents to 76 cents. CIMB said that while it had previously flagged the risk, investors could look forward to the beginnings of a global capex recovery. Affin Hwang IB, however, maintained its sell call with an unchanged target price of 32 cents. Affin said that Sapura's proposed rights issue remains an overhang on the share price, albeit longer-term positive outlooks, which still warrant a closer monitor. Reach Energy was one of the most actively traded stocks on the bourse today, after gaining official approval for its asset in Kazakhstan. Last Friday, Reach announced that its producing asset in Kazakhstan, Emir Oil, had obtained authority approval to commence trial production period of the North Kariman field for 15 months. The period starts from today until December 31st, 2019. The TPP approval allows Emir Oil to put the wells on production. This is expected to increase current oil production levels substantially. As at mid-afternoon, Reach's share price had risen by 11.36% to 49 cent, with 38 million shares traded. Reach's warrants also saw active trade today, at one point climbing 13% to 13 cent, with over 49 million warrants traded. The stock closed 12.5% higher at 49.5 cent. Its warrants closed at 8.7% higher at 12.5 cent.